Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 1st of April 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. As it's Monday, of course, we'll look at these things from a weekly standpoint. First of all, then, in Europe, both the euro and the British pound down against the US currency over the last 7 days. The euro falling by 0.67%, the pound down by around 1.19% against the US currency. Both the euro and the pound on the front foot this morning, with modest gains of 0.18 and 0.12% respectively against the US currency. Nonetheless, I think it's this weekly trend that's likely to dominate. Brexit has been the real driver here, and of course there are potentially more events on Brexit unfolding in the next few days. Elsewhere around the globe, in New Zealand, for example, the Kiwi, the New Zealand dollar, better against its US rival this morning, up by 0.45%, alongside a bouncing Australian dollar, which is up by 0.42%. But the Kiwi has plenty of room to make up ground against the US dollar following those comments from the Reserve Bank of New Zealand about the potential for rate cuts in the country. The dollar was also on the back foot. It wasn't all one-way traffic for the dollar. The Canadian dollar taking 0.4% off of its US rival over the course of the last week. It was a different story for the Mexican peso, which fell by 1.72% against the US dollar last week. That said, the Mexican peso is on the front foot again this morning, taking 0.42% off of the dollar in early trade this week. Dollar index for its part up on the week by 0.71%, though it's lost a bit of ground this morning, as you can see. Elsewhere, the dollar had been gaining against the South African rand, you'll recall, over the last week, but the rand has fought back. Look at that, gains of 0.87% for the rand against the US dollar today, and the rand trading shortly before we recorded the video with a 14.35 handle. So some interesting and contrasting moves over the week and over the last 24 hours. Okay, what's on the calendar? Events that may move the markets today. Well, it's a pretty interesting calendar, full of mid to high impact data. We've already had Caixin manufacturing PMI data out of China for the month of March, and we'll look at that in a bit more detail momentarily. To come at 06:30, we have retail sales data out of February, and that's a year-on-year measure of how the Swiss consumer has been performing. At 07:55 GMT, we're back in Germany for market manufacturing PMI data for March, and we hop over the channel at 8:30 GMT for the similar read out of the UK. At 9 o'clock, we'll hear about unemployment in Italy for the month of February. Just how weak has the Italian jobs market been? An interesting chance to get some insight there. And then at 9 AM as well, we'll have consumer price index data, core and non-core measures for March out of the Eurozone. These are both preliminary readings, of course. Across the day, we'll be looking at the UK Parliament as MPs gather again to discuss what's possible next in Brexit. And then at 12:30 we hop over the Atlantic to the States for retail sales, both ex and inclusive of automobiles, for the month of February. A pause then until 13:30 when we jump over the Canadian border for market manufacturing PMI out of Canada for the month of March. We're back in the US 15 minutes later for similar data out of the USA, and then 15 minutes after that the ISM manufacturing version of PMI is also reported. That's at 1400 GMT. A good chance here then to look at how the US economy is performing, or at least the manufacturing part of the US economy, how that's performing according to market and the Institute of Supply Management. We'll have ISM prices paid data for March as well, also at 1400, and then a 5-hour pause until 2100 GMT tonight, when we'll have business confidence data for the first quarter out of New Zealand. Okay then, breaking news and comment that's caught my eye overnight and over the weekend. And first of all, China's manufacturing PMI data moves back to growth in March with a read of 50.8 versus forecasts and the prior read, both of which were at 49.9. Chinese stocks have moved up again on the news, so it's positive feedback there from China. Any move above 50, of course, is indicative of growth in the Purchasing Managers Index, and so the market can breathe a small sigh of relief there, I believe. However, Japanese and South Korean manufacturing continue to struggle. Japan's manufacturing PMI slowed for a second month, whilst the South Korean data had its fifth straight month below 50. So whilst things might be improving marginally in China, the rest of Asia is still on the back foot. European Commission President Jean-Claude Juncker heads to Italy today for meetings with the Italian Prime Minister Giuseppe Conte. Relations between Brussels and Rome have soured recently over the Italian budget and Italy's inclusion or decision to be included in China's Belt and Road programme. Meanwhile, UK MPs are to hold more indicative votes today on alternative Brexit proposals to see if they can find any common ground or any way further forward for the Brexit process. Okay, food for thought and something to take away with you into the trading day and beyond, and why not think about this? We read and hear a lot about the disruption of the old economy by tech-based challengers, yet sometimes you really need to see hard evidence to appreciate how rapid and widespread this can be. Airbnb has dramatically altered the US hotel market in just a few years, and the chart to the right here shows the growth of Airbnb and its increasing significance in the US hotel market. Airbnb here in yellow, and as you can see, in recent times it's brushed past challengers such as Intercontinental Hotels and more recently Hilton Group, and is rapidly starting to challenge the Marriott-Starwood combo as the major player in the US consumer lodging space. So pretty impressive growth from a company that just perhaps a decade ago no one had ever even heard of. Okay, it's risk warning time. Please do take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly. Thank you very much for your time today.